Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, yeah, today there were a lot of big winners. A lot of stocks made nice moves today. We had a big move today with let's look here first at AKTX. Okay, so that stock was alerted pre-market. So congrats to everybody that's following Ospreyeye on. Following me on the stock twits, put out that morning PR, and then it ended up running. It ran all the way up to 12, and then it hit resistance and pulled back. If you take a look at the chart here, you could see it came up and it filled this gap. There was a gap from back here in May, and so that gap filled, and then the share price came up to about the bottom of the next gap, which is right up here at about 1250. You can see there's another gap from May, and so that's going to be the next key level to break. It needs to break this 1250 to 13 zone to fill the next gap and head higher. Today's candle did close above the upper Bollinger Band, and it did. The big technical development as well was the close above the 200 and 300-day simple moving averages. So the 300-day simple moving average at 782 is the key level to hold on a pullback. If that level breaks and the 200-day simple moving average breaks, there's EMA 4 just below at 687, and then below that is the 100-day simple moving average down here at 565. And as you can see, there's a small gap between high of day yesterday and low of day today. So if you see a drop below that 200-day simple moving average, shoot for a gap fill and a potential reload off that 100-day simple moving average. There was huge volume today, so notice the giant volume spike, but also notice so there's a big volume spike down here. Notice it was the largest volume since the last big run. But then look at the long upper wick that formed on today's candle. So there was this big upper wick, and if you look down here at accumulation distribution, it actually spiked down today, and CMF was actually negative. And so basically this is bearish divergence. Even though AKTX was up huge on the day, up 56%, it still had a spike down on accumulation distribution. This is what dilution looks like on a chart. That it looks like they were possibly selling shares into the run. If you look at the last big long upper wick that formed here on the 13th, the share price did pull back after that. So you could see the candles work back into the bands. If that 300-day simple moving average holds, that's going to signal more upside potential, and then you're going to want to see a break through 10. This bottom of the gap is a big resistance level to break, and then we'll be shooting for a potential gap fill up here to 13 to the upside if that 300 holds. Okay, so take a look at RTK. Okay, this stock performed really nice today. Congrats to everybody that caught the alerts last week and then caught the alert again yesterday. Closed up 34% today. Notice RSI did close in the overbought power zone. It has a history of pulling back when it gets above 70. Fasto pulled back from 80, but it is hitting the 80 level. You can see there was an upper wick on today's candle. So yeah, yesterday there was this nice bounce while in an uptrend. It bounced off of EMA 13, and that was signaling more upside potential. And what we were looking for was a close above the closing price here on the 13th, and so that happened, and then we wanted to see a break above the 50-day simple moving average. That happened as well at 37 cents, and then it also closed above the 100-day simple moving average at 41. So that gold line is the key level to turn into support. This was a huge move today for RTK. The materials and special chemicals, specialty chemicals sector over here, these stocks have really been in play. So they've been heating up. So keep that in mind. What you want to do is you want to find the hot sector first, the sector that's in play, and then you find the stocks within the sector that are running. That makes life a lot easier if you're looking for stocks that are heading higher. And so, yeah, if you look here, the big resistance level to break is back here at 55. This 50 to 55 zone. So this was a big channel that formed previously, and so it was a big resistance zone and support, and then it broke and dropped, and so now you've got this move where the jar is filled back up to these levels. Okay, and so it could possibly head back up to back up to this 65. That would be the next big level to break, would be up here at the closing price from back here in July, the high close at just about 65 cents. That would be the big target if the 100-day simple moving average holds. That's what we'll be shooting for. And then also just above that is the 200-day simple moving average at 93. And so that's the big level. If the 100-day simple moving average turns into support, then the 200-day simple moving average becomes the target. Keep in mind that these stocks need to get back above $1 that are trading below to stay compliant and stay trading on the big boards. So they want to push this thing back up to $1. We'll see if they can get above this 50-55 zone, and then 65 is the big level. Get above 65 and you could see a run back up to the 200-day simple moving average. There was a big volume spike behind the move today. So nicely done on RTK. Congrats everyone. And so like I said, specialty chemicals, materials are running. And so take a look here at GEVO in the same sector, up 33% today. It makes life really easy when you trade the hot sectors. Okay, so RSI did close at 74. There was a pullback from high of day, and that lowered Fasto. So Fasto's down to 62, and it's in the bull zone. Look at the parabolic spike on plus DI. Notice how vertical that is. That is an unsustainable move. So this was a really bullish move today. As you can see, this chart was winding tight. It's difficult to read, but I needed to show you some of the action from back here in February. There was this big gap back here in February, and so that's lining up with the 200-day simple moving average, and with the close above the 100-day simple moving average at 68 today. If that level turns into support, this is going to be the target. First the 200-day simple moving average, and then the bottom of the gap. Those are the two levels to shoot for to the upside. If it can get through Dollarland's always a big level to break for penny stocks. The close today was well above the upper Bollinger Band, and there was a big upper wick formed on today's candle. So the candles could work their way back into the bands. That does happen, but that doesn't mean that the run is done. It just means that it's giving you an opportunity to reload lower for the push higher. As long as support holds, then the uptrend should continue. What you'd look for on this play is for the 100-day simple moving average at 68 to hold. Do you want to see that? Notice how it's lined up with the EMA4 at 68. That's going to be a big support level. If it can bounce off of that on a pullback, then it could continue higher. If it keeps pushing higher tomorrow, then you could see this a 90 to $1 zone is going to be a big resistance zone. Notice that was support, and then dollar is always a big level for, like I said before, for penny stocks. So if you see it get above that, then you could see a run up to the 200-day simple moving average. Notice the huge volume behind the move today. I mean, giant volume. There was a parabolic SAR bullish flip. MACD is still pinched down here and hard to see, but the MACD line starting to heat up. And then so GEVO is performed really well, and so we've got our eye now on RKDA. Okay, so this is another specialty Geez, I keep doing that. Sorry about that. This is another materials, specialty chemical penny stock. Notice that it's got a much lighter volume, only 187,000 shares traded. You've got RSI here at 63. You've got Fasto at 64, so they're both in the bull zone. Check out plus DI. Notice how it's not all crazy. It's just starting to spike up. That's showing the bulls are in control when the green line is above the black and the red line. So yeah, so this chart is really heating up. There was a bullish close today above the 50-day simple moving average. That's at 46. And then notice the share price hit the 100-day simple moving average at 55. We're looking for a close above that level. That should be the signal that it wants to break out higher, and then we'll be looking for a run up to this 200-day simple moving average at 73. If you look here at the high close resistance level, notice how that is lined up right with the 100-day simple moving average. So we always look for high close horizontal resistance, and then we look for moving average resistance. And so as you can see, that 55 is a giant level on this chart. It's huge. It's the major resistance level. If you see a close above that level, if you see it breaking intraday and it looks strong like it's going to close above, that's going to be your big signal that it's breaking out. Notice how this is in a multi-month sideways trend, okay? It's a sideways channel, okay? So this is the bottom of the channel. Notice how it bounces off the bottom and then it runs to the top, right? It bounces off the bottom, runs to the top, bounces off the bottom, runs back up up to the top, right? So it bounced off the bottom, now it ran back up to the top. So what's it going to do? Is it going to pull back again, or is it finally going to break out higher? If you get a breakout above the top of this channel, that's a huge indicator that the stock wants to run higher. What you'd want to see, what needs to happen with it, is it needs to have a bullish volume spike. That's the indicator. So right now, volume is still really light. There was only 187,000 shares traded today, so people weren't taking the bait. But we did put out alerts today. This is still day one. So if it gets a big push tomorrow and it's day two, that sets up the people that got in on day one to exit. So just keep that in mind. It's all about getting in on day one, and everything is fun. It's when you start chasing that you start getting in trouble. Okay, so look at CYCC here. Okay, so it's got RSI up here at 70, so it's hitting the overbought power zone, and then you've got FASTO up here at 96. So it's at overbought levels now on both indicators, and so it's going to have to be able to head higher in the overbought power zone to keep this uptrend going. It could take a pause here. So this was a huge development for CYCC today. It got crazy into the close. People were buying hand over fist, and it really elevated the share price. It closed near high of day, but it pulled back, so there was a small upper wick. But notice the upper Bollinger Band is way down here at $2, and then EMA 4 is way down here at 196. So the close well above the upper Bollinger Band could get the candles working their way back into the bands. I mean, it could even gap down open. Right now, it's been pushing higher in after hours trading. The last time I looked, it was at 230. So that would be best for the bulls that are holding this. They're wanting a gap up open. They're wanting this to open strong tomorrow. If you see weakness into the open tomorrow, that's going to signal downside risk that the candles could work their way back into the bands. Notice this is already on a 2-day run. This is the second day of the run, and then the candles, the huge development. This is a giant development. The share price closed above the 50-day simple moving average at 184. Notice how that was tested before and it failed to break, and then it tested again yesterday, and then today it finally closed above. But not only did it close above the 50-day simple moving average, it closed above the gap, the top of the gap, and then high close horizontal resistance. This was the high close level. So it broke major resistance levels. It broke the bottom. This bottom of the gap was the top of this previous channel, and then that broke on the 12th, and then it pulled back below, and then it closed back above yesterday, and that was the signal that CYCC was heating up to be back in play. And what we had been looking for a while for this play was a break above this 50-day simple moving average. That finally happened today, and a break above the top of the gap. And so this is all signaling that it wants to head higher. So if it does pull back, don't freak out. As long as this $190 to $2 support level holds, you want to see it stay above 190. You want to see it stay above the 50-day simple moving average, and then you want to see it stay above this high close level and the top of the gap. If it can stay between 185 and $2 and hold that level, then it could push higher. There is a chance that it's going to gap up and keep running tomorrow, and if it does that, then this top of the gap back here at about 295 is going to be the next target. Notice how there's no resistance in the gap. That's why gap fills are awesome, because you can get some really nice runs in between the bottom and the top of a gap. And so if it does run up to the top of this gap, notice how the 100-day simple moving average is just above at 315. It might run up and test that level, but keep in mind the top of the gap is always the level to lock in gains. That's always a climax level. If you look at the CYCC 15-minute chart, you can see the breakout midday. Notice that it had this nice uptrend all day. It heated up yesterday. This was the classic break above the moving averages. Okay, so the Bollinger Bands were super tight, and then on this candle right here, it broke above all the moving averages, and then it started riding EMA 4 support higher. When that happens, all you got to do is jump in and ride. Just ride that baby. Held the middle Bollinger Band. That signals just keep riding. And so all day here, it was holding support. It did pull down and it closed, but it held EMA 13, and so it was very, very strong even during the consolidation. And then once it got above this level right here is where that gap level was in the 50-day simple moving average. And then once it broke above, then it really got going. Everybody jumped in on the break above resistance, and you can see how the volume really piled into the close. So it did push hard. You could see the candles work back into the bands before the next push higher. You've got EMA 8 down here at 208, and you've got this basically the middle Bollinger Band is down here at $2, and so if it pulls back and holds the middle Bollinger Band, the chart's still strong and it can push higher. So yeah, keep that in mind. And then yeah, check out OCRX, closed up 24% today. This was a really nice move. This is another stock that's breaking out above resistance. It's you know, and once again, I had to show you a longer term chart here. There's this long downtrend, and then that turned into a sideways channel, but it was basically a giant descending triangle. And then today it busted through the top of the descending resistance line. Notice how this was the top, and then the top, and this formed descending resistance, and then it broke above today, and then it closed right below the 200-day simple moving average at 126, and then right below this July high close resistance level. So if it can break above 126 tomorrow, that's going to be the signal that it wants to head higher. It needs to close above that level and turn it into support. If it can do that, then we're talking about the 300-day simple moving average at 166. If it fails to break this level tomorrow, that's going to complete the fill back up to this prior resistance level, and you could see the candles consolidate. If that happens, the 100-day simple moving average at 108 is the key level to hold. That's basically, it's back here around $1. I mean, you've got everything lined up $1. You have the middle Bollinger Band to the 100-day simple moving average, and all the moving averages in between. They're all converged right there between $1 and $1.08. So you want to just see that level hold on a pullback. This looks like it wants to push higher. You know, it's just, if it breaks down below the 100 and the 50-day simple moving average, that's a signal that the chart's broken and it's no longer in play. As long as it stays above those levels, it's still in play. If it closes above that 200 or breaks above, especially on a volume spike, that's your signal that it wants to run higher. Notice that today was the largest volume since April. You have to go way back to April to see this type of volume, but it was still small. It was still a relatively light volume. This has been thinly traded stock, so keep an eye out for a volume spike. Okay, take a look at ALQA. This stock had a very nice move today. It's another stock that's trying to break out. It's hitting the top of the channel here. It's hitting the upper Bollinger Band, and then you've got high close resistance here on the 28th of August. If it can break above that, and then you've got the 200-day simple moving average at 46. So it's basically 44 to 46 is the huge resistance level on this chart. And if you see a close above that level, if it can break above, then it could run up here to the 300-day simple moving average at 60. Notice that that's lined up with the top of the gap. There's a gap back here from March. This is the bottom of the gap. This is the top of the gap. It started filling the gap and then it pulled back. And so, you know, this is also, this resistance level is the bottom of the gap level at 44. So, you know, this is, or 45. This is a really big resistance zone. If it breaks above, that's going to be a huge indicator that it wants to head higher. If it fails to break that level, that's going to signal consolidation. You can see EMA 4 and the 100-day simple moving average tested. You'd want to see it hold that 35 to 36 support zone. Notice there's a big volume spike today, so really good volume behind the move. This is all signaling that it wants to break out higher. It just has to follow through. There was a PSAR bull flip as well. The green dots flip below the candles. So the chart's all heated up. It just has to get through that 200-day simple moving average. Okay, so take a look at CUR. If you caught our video last night, this is the video from last night, or the chart from last night's video, and then or from yesterday that we posted, and then we showed in the video as well. And then yeah, this is very similar to what happened with WAC yesterday, or you know, the WAC play yesterday. How it had the after hours news the day before that, and then it opened up yesterday with the big gap up open, and then that black candle formed. And you remember how I discussed how the black candle forming after gap up open is a signal to get out? Well, here it's a kind of similar move where there's a gap up open today. Notice there's a gap between high of day yesterday and low of day today, and then the share price ran all the way up and almost hit our 50-day simple moving average at 196 and bottom of the gap at $2 target. That was our target. It hit 180 and then it started pulling back. And when that long upper wick formed, that was your red flag. And why was it your red flag to lock in gains? Because you knew that there was an unfilled gap below. The market makers leave unfilled gaps for a reason. It gives them a target to shoot for on a pullback. It also gives traders an opportunity to lock in gains. If you follow us and you're in our chat, you know that we alerted CUR. We were all over it yesterday. So you know, everybody was entering yesterday, and that's why we say get in on day one, and then day two you're ready to sell. had the gap up open, the big run, everybody was up, just freaking lock in those gains, and then you shoot for that gap fill for the reload. And so it's really simple. You can keep, we do keep it simple stocks. You don't have to overthink it. It's all about the good entry point, EPIE, EPIE. Entry point is everything. It's just all about that entry point. So try to begin your trades with the entry point on day one, and that way you're set up to sell on day two if the chart breaks down, as opposed to being somebody that's becomes a bag holder. And so I'm not saying this is a bad chart. This is still set up, and it's still a really bullish move. It's just that gap up open was your signal that this was not going to have a sustained run. The saying in penny land is gaps get filled, and they always eventually do. This gap over here is going to get filled. It's going to happen eventually. It looks like it's set up to do that on this break above the top of the channel. So you want to see the top of the channel hold. If it gets back into the channel, then that's going to signal that the chart's broken and it's no longer in play. We'll wait for a break back above. But if it can hold that 130 level, then it's going to signal more upside potential. If you look here at the CUR 15-minute chart, you can see the gap clearly right here on the chart. And so so we have the up gaps, an upfill gap, and on a gap that's in where the share price is running up towards the gap and filling the gap to the upside, the top of the gap becomes the sell zone. Well, the inverse is said for a downward gap. When the share price is pulling its way back and it's working to fill the gap to the downside, a gap fill for a downward gap fill is a signal to buy. So once this gap fills, it's a signal to take a position for a technical bounce play. That's for a quick trade. It doesn't mean that it's going to be a sustainable move. It just means that when the gap fills, it's a climax event where you usually see a quick change in trend. You usually get a bounce after that happens. That's what happens 9 out of 10 times. And so if you look here, that's my estimation. It seems like it happens every time. Sometimes it doesn't, but it seems like it's a very, very, very dependable trade. And so yeah, so this gap fill here, just like WAC today, we put out alerts yesterday that WAC was going to come down and fill that gap at 65, and 65 is going to be the reload level, and it freaking did that exactly. It came down, filled the gap, bounced, and then it had a nice return after that. It ran up to about 75 cents, so you could have made a really good trade there. And then the key is to, if the chart breaks down, to lock in the gains there. If it goes higher and it turns bullish again on the 15-minute chart, you can keep riding. But if it fails to get back above that middle Bollinger Band, it's a signal that it's still risky to hold. So just want to explain that. And so here we've got this gap starting to fill. So it dropped down to 137.5. About 137 here would fill the gap. This green line here fills the gap. It's trying to bounce off the 50-day simple, or the 50 simple moving average at 140. That's a huge support level. It signaled downside risk when the middle Bollinger Band broke at 2 o'clock. That was a signal the chart was cooling down. And then for us, we put out alerts about the climax spike at the open. When you have a giant bar that forms above, the candle forms above the upper Bollinger Band, and then a red candle starts to form, and then you have a giant volume bar, that's what we call the climax spike when you have the pullback from high of day. And so this was signaled to lock in gains, and then when the EMA4 support broke, that signaled more downside risk. So basically this has been people have been on the sidelines, and now they're looking for a reload, and this gap fill could be the climax event for the bounce coming up. And so even though it closed up on the day at 3%, it still seems like a down day because it was up so big and it pulled back. So look for that gap fill to be a climax for a catalyst for this to continue heading higher. That candle today is a inverted doji, which is also called a gravestone doji. Okay, and so that's like a reversal candle. The candles, notice how the candle's floating above the upper Bollinger Band. The candles like to work their way back into the bands. It doesn't mean the chart is broken. It just, stocks don't always go straight up. The big red flag here is look at accumulation distribution. Check out the huge spike down. So, and then look at the big spike down on CMF. So this was big bearish divergence. Even though it was up on the day, they sold off huge. This is what dilution looks like on a chart. They were obviously selling shares into the rally. And so, yeah, we just want to see support hold. It needs to stay above that middle Bollinger Band and the top of the gap. And if it can do that, then the uptrend should continue. And then now the support level is right here. So yeah, you can see it's a very micro, we go by the high close, but you can see the gap's even smaller than that. Okay, yeah, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.